Hello, Sector Watchers. Welcome to the show. This is the 188th episode of Sector Spotlight for Monday, the 14th of August. My name is Julius de Kempenaer and I am presenting to you from Amsterdam in the Netherlands. For today, I want to address two universes, RRGs, whatever you want to call it. First, I want to take a look at the recent rotation for sectors. We're going to do that on a daily basis. Last week we did it on a weekly basis. Today I want to do it on a daily basis. So look at a little bit shorter term rotations and see if we can find some alignment with the longer stuff that we talked about last week. And then after that, I want to take a look at the rotation for growth, value, and the combination of growth and value size indices, because that's going to send us some, I think, interesting information, interesting observations. Ladies and gentlemen, this is Sector Spotlight. On the screen is the RRG for sectors, and the weekly on the right and the daily on the left. And as I told you in my intro, I want to focus on the shorter term this week. So that's the daily RRG. But you always need to put things into perspective. So what I want to do is basically look at the last 5 trading days. So that's last week's trading. 1, 2, 3, 4, 5. And then because it's already Monday, market is open right now, 6. So this is what the market looked like last week on Monday. And then we go 1, 2, 3, 4, 5. And then I want to see if I can find the more interesting sectors and the more interesting rotations and see if some of them are lining up with what's happening on the weekly RRG. If we really quickly are going to do that on a sector by sector basis, and I'm going to highlight the sector here, so that's energy, and we have the energy tail right here. If I go back 1, 2, 3, 4, 5, then you see that last week the sector rolled over, kind of negative, but in the last week, so the last 5 days, it picked up momentum and relative strength again. So it got back in line with that strong move that we're seeing on the weekly tail. So the energy sector is one of the sectors that I want to look at the individual chart. Let's do that right away. So here is the energy sector. And as you can see, it took out that overhead resistance. It's now pushing against overhead resistance around 90. And it looks like as if we are building a small rising channel. All in all, that is a positive thing from a price perspective as well. There's a little bit of wiggle room. Could go back to 88, a little bit lower and still be inside the channel. But what's more important is the improvement in relative strength. You can see the turnaround in relative strength here and how the RRG lines are responding to that. So the energy sector seems to be getting back in line with the strong tail as we can see it on the weekly RRG. And then we have healthcare. If we look at the healthcare sector, then you can see, and let's scroll back 1, 2, 3, 4, 5. So last week, it looked as if the healthcare sector was going back towards the lagging quadrant. It actually rolled over just when it was inside leading. However, in the last 5, 6 trading days, that picture changed and healthcare is now actually powering strongly into the leading quadrant. And it's now back in line with the weekly tail that's moving into the improving quadrant and actually increasing its distance between the nodes. So that's an increasing RRG velocity, as we call it. So if I bring that onto the price chart, then when we look at that, we can see that XLV is pushing against resistance in a range, let's label that between 136 and 137 roughly. If that is being taken out, if that will be taken out, the healthcare sector will, overcome a heavy boundary and move, got plenty of room to move higher. But here also, look at the relative strength. That is, putting in a double bottom. It's completed a double bottom. It's turned around that series of lower highs and lower lows, and it's ready to move higher. And that is being picked up by the RRG lines, which are pointing higher, pushing the XLV tail. This is also a daily chart, so these RRG lines are matching the observations on the RRG, pushing XLV deeper into the leading quadrant aligning it with the strong move as we see it on the weekly chart. So here's utilities. That is less interesting. Both are in the lagging quadrant. Daily is picking up a little bit, but it's still at very, very low readings. XLI is an interesting rotation, is an interesting chart. If we bring up the weekly, then we can see, and I need to go back here, 1, 2, 3, 4, 5, 6. So you can see how XLI last week already, so when we spoke last week, so it's 2 weeks ago, already started to rotate back up, shaving off that 100 level on the JDK-RS ratio line. And in the last week, it actually moved into the leading quadrant and started pushing at that strong RRG heading. So it's confirming that strong rotation that we already saw on the weekly tail for XLI. Now, if we bring that onto a price chart, then you can see, and you know that XLI was one of the 2 sectors that actually moved to new all-time high levels on the monthly observation, and it's still holding up there really, really strongly. It looks as if we're seeing a little bit of a rollover here on the price chart. So there is little support levels been building up around 108. If that gives way, there is room for a little decline in XLI, but here also the relative strength is the more important observation. You can see how the tail is pushing into the leading quadrant. We have some overhead resistance and relative strength here, but you can see how this low is now being translated in both RRG lines, pushing above 100, almost at the same level, which causes an almost perfect 45-degree angle on the daily RRG. And more importantly, it's in line with the strength of the weekly tail. So the industrial sector, just like energy, just like healthcare, the daily tail, so the last week's rotation, has now put the daily tail back in sync with the weekly tail. And that's usually a pretty strong and encouraging sign for a further movement, in this case, into the right direction, so stronger relative strength. Not necessarily stronger price, but definitely stronger relative strength. If we go further here with these sectors, so we've got real estate picking up there. They are back in line, so that's an interesting rotation as well. When I bring that onto the price chart, so here's the daily price chart. I'm not as fond of real estate as I was for energy, industrials, and healthcare. And the reason being that this relative strength line is still pointing lower and lower. The turnaround that we saw in these other 3 sectors is not present here. And you can see how the RS ratio is still at a fairly low level, where for the other 3 sectors, RS ratio was either already above or very close to the 100 level. So for real estate, I'm holding back a little bit more than on the other 3 sectors. We go to staples. If you go to staples, then we can see contradictions. So on the weekly tail, it was always pointing right up, and you can see how on the daily it's already starting to lose RS momentum, and you can see how it's a very short tail, which indicates that there is not a lot of power behind this move. So I'm going to leave staples alone for now. So here is communication services, and communication services is rolling over where it was curling back up inside the weakening quadrant. So there is a bit of a contradiction there as well. You see how last week, 1, 2, 3, 4, 5, things looked really good for communication services. It was almost like, yes, we can pull this one off, but then you can see the price action of last week and it's already rolling over. So that sort of, it either delays or negates the strength that we're seeing in that weekly tail. So I'm going to leave that alone for now as well. And then if we go to technology, and then technology is obviously a very interesting sector because last week, 1, 2, 3, 4, 5, it already started to move in line, and that has now been continuing to push that tail for the daily XLK tail further into the lagging quadrant. And it's confirming the weakness in the weekly tail. And if I bring that on a price chart, we can see why. Here you can see how a topish structure has been put into place on the price chart. This is the daily price chart. Lower highs, definitely a lower low. It looks today as if XLK is able to push back above that support level, but nevertheless, there's plenty of overhead support, which is gonna kind of block the way up for XLK in the near future, making it less of an interesting sector. But more importantly, look at the relative strength here. That is a clear move lower. It came out of that sideways range. It's now accelerating lower, and that's pushing both RRG lines further into the lagging quadrant. And that's what's causing that tail to move further into lagging. So for the time being, the telecom sector, the technology sector is actually not looking too good. It's pushing further into the lagging quadrant, while it's already inside weakening on the daily tail. The longer term, probably still good, but it looks as if we need more weakness in the 1, 2, 3, 4 weeks ahead before we can actually turn this weekly tail back up and make it an interesting sector again. Right now, there's quite a bit of risk inside the technology sector, I'm afraid. We go to materials. Where's materials? Then we can see how the weekly tail is pointing further into the improving quadrant, pointing towards leading. So that's looking pretty good. If you look on the daily, it's actually rotating lower. So it's negating that positive tail on the weekly scale. So we probably need a little bit more weakness before we can pick this up. And we don't yet know, we can't really tell whether this tail will make it all the way to leading or if the weakness on the daily scale will sort of push this further into lagging and cause a rollover here. So right now, no clear consensus for the materials sector. And then if we look at financials, where are you? Here's financials. You can see how the financials tail on the daily has just started to rotate back up, while it's nicely pushing higher inside the improving quadrant on the weekly scale. When we take a look at the price chart, then we can see definitely some topping price movement here on that daily picture. Lower highs, lower lows, it's resting at a bit of support around 34.60. My problem with this chart is that it looks as if we're picking up a little bit of momentum here, a little bit of relative strength. That's causing that little hook back up. But that overhead resistance in the relative strength line combined with the weakness in price makes me doubt whether this is a legit move and we can make that move higher. If we break, if relative strength breaks above this overhead resistance in the coming days, then XLF is definitely one of the sectors to keep an eye on for further relative outperformance. But for the time being, I'd be very careful with this one because this looks like a heavy resistance area. We're very close to the benchmark here. So this could change quite rapidly, especially because the price chart is not very supportive of an upside move. As a matter of fact, if we break below the lows of the last 2 weeks, that's 34.60, I think we can see an acceleration lower to initially 34.20, maybe even below 34. Leaves us with one more sector, that is consumer discretionary. And if we bring that on the RRG, then we can see how XLY is actually inside the leading quadrant, but moving lower on the RS momentum scale. And if you look at the daily tail here, you can see how that, let me just scroll back, 1, 2, 3, 4, 5, 6. So this was last week, started to counter move, like weekly going down, daily moving up. That happened during the week, but now you can see that the last bit is already starting to roll over. Risk is creeping into that sector as well. And if we bring that onto the price chart, then you can see how that failed breakout attempt is taking its toll now. We established a new level of support at the level of that previous high. It's around 168. We've tested that 1, 2, 3 times now. But look at the relative strength line, and that's what's worrying me. It's not being able to take out the previous high. We're moving lower. If that takes out this area here, and you can see that's a pretty, it's lining up with that high right here, that would not be a very good sign. And you can see how the speed of movement, how the rate of change of the RRG lines is getting tired. It's ready to roll over. And that's what you see on that daily tail right here. And when that's continuing, it'll very likely push that weekly tail further into the weakening quadrant and cause a little bit more weakness for the market as a whole. Because mind you, if we just go back to the rotations that we are seeing on these RRGs, then consumer discretionary, technology together, almost 40% of the market cap, and XLC with that, there's a lot of power, there's a lot of market capitalization still in a relative uptrend, but losing momentum. And that loss of momentum right now is putting a damper, is putting a brakes on upside potential for the S&P as a whole. So for the time being, energy, industrials and healthcare, probably very interesting from a longer term perspective, especially because the daily tails are lining up with these sectors. And please remain very careful with definitely consumer discretionary and technology as their tails, especially technology, the tail is pushing further into lagging, and XLC is having trouble as well. One of the universes on the relative rotation graph page that I use a lot to get a handle on the bigger picture and the bigger rotation and how these can affect general market conditions is the breakdown in size. So that is large cap, mid cap, and small cap, and the breakdown in value and growth. On the left-hand side, I've got the weekly RRG for value versus growth. And this message is very, very clearly in favor of value over growth. It's what we've been seeing over the last few weeks with the pressure on discretionary and technology, which are the ultimate growth sectors if you want. So that's the message you're getting from value versus growth rotations. Now, if you go to the other side, you will see the rotation of large cap, mid cap, and small cap. And here also the image is actually very clear. It's in favor of mid and small caps. And the rotation is out of large caps, where you can see large caps rotating. They were in favor here, so the rotation was opposite. And this is only in March. And if we scroll forward, you can see how large caps started to roll over and is now inside weakening and pointing towards lagging, while mid and small caps are in the opposite quadrant and improving and heading towards leading. So definitely favoring mid and small caps over large caps. Now, the interesting thing occurs is when you combine these two RRGs, when you combine these two cross sections of the market into one RRG, and that gives you this RRG. And I thought that was quite an interesting observation, because here again, it's a very, very clear message. By the way, there's none in leading, there's none in lagging. So that indicates that a transition is going on. There's a rotation going on. And the rotation here is very clearly visible. The rotation is out of growth, large cap growth, large. So this is the large cap index, this is the growth index, and this is the large cap growth index. I don't think the image could be more clear than this. The rotation, so the weaker section of the market right now, is large cap growth. First large cap, then growth, and then large cap growth is the ultimate kind of like weaker part of the market right now on this weekly rotation. Pretty much everything else is picking up in relative strength versus large cap growth. That's a clear signal. It means that there's actually only one segment in the market that is putting the brakes on, and that is large cap growth, as you can see here. If you put that again, we're putting it against the overall U.S. market, the Dow Jones U.S. index. That has all it. So it's a closed universe. Everything that is on the universe in the universe is on the RRG, and I thought that was a pretty clear message. And there's two tails that I want to focus on because I think that could be a very nice play in terms of overweight, underweight, or long short. Obviously, it's the large cap growth on the weaker side, the rotating out of it. And I just wanted to go to the complete opposite, to the extreme opposite, which is value mid cap. We could argue value small cap, but as you can see, that last node here is rolling over a little bit, while mid caps are actually continuing to do strongly. So I just go with the value mid cap. They're probably all very, very similar, but just, to look at one chart, I'm looking at large cap growth here, and what you can see is that price has run into resistance at the level of the dip between that double top, so that old support is now acting as resistance. It's a resistance range because we've got two previous tops here. We're now back below it. That's a weak sign. And as you can see, relative strength bounced off that resistance, coming off that 2019 and 2021 high in terms of relative strength. The RS ratio was at a very high level, highest level over the last 5 years, and momentum is going down. So that suggests that this sector is ready for a little bit more underperformance. Only when we take out relative strength to the upside and this starts to move up, but that's not going to happen overnight. As a matter of fact, it's not going to happen over the week. So for the time being, I'd be very careful. I'd like to underweight the large cap growth sector, the large cap growth segment for US stocks. So where is the money moving to? Money's moving to, at least one of the segments where it's moving to, is value mid-cap, is mid-cap value stocks. And as you can see, price chart is not super exciting. It's moving sideways. But when the market is weak and something is sideways, it's actually good. It's starting to come up as potentially interesting. And that's what happened with the value mid-cap section. We saw a little bit of a rally here. There's overhead resistance, quite stiff, between 7,000 and, what's that, 7,000 and 7160. But what I like is that relative strength has bounced off support and is slowly starting to move higher. And that's being picked up. That move is being picked up by strength in the RRG line. So that's moving higher. So compared to large cap growth, value mid cap seems to be a candidate for overweight position, together with a few of the others as we saw on that RRG. They all look quite similar. The main message is the weakness in large cap growth stocks for the US. And that wraps up Sector Spotlight for this week. Thank you for watching. Please remember, Sector Spotlight is available on demand on the Stock Charts YouTube channel, usually recorded and uploaded on Mondays. Feel free to share your thoughts and ideas as usual in the comments below the video. My other contact handles are on the screen. I'm looking forward to seeing you again at a new episode of Sector Spotlight next week, same time, same place.